Today we're going to cover the loan process, and I actually asked Adrian to join us because he can fill in some gaps, because even though I have a loan license, I last originated a loan in March of 2011, and we use Adrian because it's a pain in the ass to stay on top of things. But here's the purpose of this training. You have, or I have, and I'm going to give you a distinct advantage when serving your clients when you have a really comprehensive awareness of the loan process, because it allows you to be a lot more of a servant to your client and a Sherpa guiding them through this process. And if they're working with a Rockstar LO, the LO is trying to educate them along the way as well. But think about it. It's a scary endeavor, right? Mm-hmm. Especially if you're a first-time home buyer. It's terrifying to be on the hook for $400,000 or whatever the amount of the loan is. That's pretty scary, right? You're agreeing in writing to make payments for 30 years. Payments that are more probably than your rent has ever been, or well, period. So here's the tools you're going to leave here today with, though. You're going to know when things are supposed to happen so that you can have a macro view of the process and recognize when they're not happening, right? Like when should an appraisal be ordered? When should it get back? When should docs be ordered? When can they or can't they be ordered? I had a conversation last week on one of my listings where we got asked for a second extension. The first extension is kind of a layup, you know. Shouldn't be, but I didn't grind her very hard. The second extension, I ground her hard because I was getting the same reasons that I got the first time. So I said, give me your loan officer's phone number. And I called the loan officer, and he started giving me the same BS. Oh, well, you know, their taxes weren't filed. We had to file and get a transcript and blah, 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 blah. Time out. Have you sent out the CD? That's all I cared about. And Adrian knows why I cared about it. And by the end of today, you guys will know why I care about it. Because that tells me when it can close, period, end of story. If the answer had been no, they shouldn't even really be speculating on when they're going to close until they've done that. Because shit happens, right? Delays happen. So we're going to go through all that stuff. I want this to be interactive. I want you to ask questions. I've deliberately asked Adrian to chime in when appropriate, but this will be really powerful information. And at the end, we're going to talk about the art of counting backwards, because it's amazing to me in real estate how many days are lost at the front end, and then at the tail end we have to ask for a one-day extension, right? Whereas if you just acted with urgency and your lender had acted with urgency at the beginning, we'd be closing everything early, right? All right, enough of the setup. We're going to kind of do this in a little bit of a facetious way, right? We're going to look at the whole process from a buyer's perspective, then from the lender's perspective, right? Then from the crappy agent's perspective, and then from our perspective, right? And I'll tell you this, I think this slide deck is only 8 slides long. Cool. But you watch, it'll take us an hour-ish to kind of go through all this, because we're going to kind of giggle at the beginning, and then we're going to go slowly through the end so that you get the right info. So what do you think a buyer's thinking when they sort of launch into this process? And I mean before they ever found a house.
I have so much money, and I'm just going to go out and buy a house, and I'm not even thinking, so I need a loan. What?
Right. Yeah, or my friend at work got a house. That seemed like a great idea. Right? Or I read all these articles about the market and yada yada. Jane.
I also think that they think about, I have $10,000.
Yeah.
And that's all I need for my down payment.
Yeah.
Yeah.
That's all I need to
Well,
close.
my sister in Iowa.
You'd be absolutely correct, right? They do
Or
the
whatever the
math,
number is, yeah.
and they go, okay, my friend told me about this loan program that only required 3% down. I want that. And in the neighborhood I'm looking in, it's 400 grand, so I need 12. Right? And what else would you expect them to think? Right? They're just sitting watching TV. Right? So first thing they think is Adrian's a necessary evil. Because what do buyers want? They want houses, right? They don't want mortgages. They want houses, but they also know they don't have the other 388 grand it's going to take to buy the $400,000 house, right? So they want the house, they got pre-approved, right? And now they need a house nicer than what their lender said they could afford, because your pre-approval was not good news, right? How often is it not good news?
Often enough, yeah. They
Yeah.
want to push it up quite often, yeah.
Yeah, because of the joke we said earlier, which means they didn't consider taxes and insurance and HOA dues and, you know, all of those things make the payment go up, all of which make what you qualify go down, right? What's the Fed gonna do later today? Raise rates. What does that do to all of your borrowers' pre-approval letters?
Change them all.
Drives them all down, right? Depending on their price point, a quarter point in interest can be up to 50,000 in purchase power. So get with your lender and say, hey, what does all this mean, right? If you saw my Northwest Market Update video that I posted just yesterday, I haven't emailed it out to anybody yet, but it's on YouTube now. I talk about how in some markets, appreciation has been over 45%. At the same time, income has only gone up by 14%. Is that a sustainable model? Not even close. And at the same time, what have interest rates done? They've gone up 100 basis points. That's a full percent, right? What was 3.5 is now 4.5, right? And after today, it probably won't change a lot because it's already built in. They're expecting it, right?
They control our bank borrowing rate, so eventually it pushes ours up, but it doesn't have a direct correlation
Yeah.
initially, yeah.
But think about that from your buyer's perspective, right? It's all the scariness of the first interaction with the lender. Whatever sadness or grieving happened then is going to now happen all over again because the pre-approval amount's going down, not up, right? So they go and get an updated pre-approval, right? And Adrian or whoever you're working with works hard to figure out ways to drive up the purchase price, right? What percentage of deals do you say, do you have a buyer pay down debt to get their pre-qual higher?
At least 30%.
A third of who he talks to can't afford what they want, but if they paid off that Capital One card or if they paid off fill in the blank, now they can afford more, right?
We do it through closing now, so we can actually pay the cards as part of the settlement statement, just to push up what they qualify.
So you probably have examples, and you don't have to share them, but where someone intended to put 10% down, instead put 5 and use the rest of the money to pay us something off, right? Or
Or the appraisal comes in low, and when we restructure it.
you gotta
we get
shuffle
that.
there.
Yeah.
Can you still pay down an installment loan to under 10 payments and exclude it?
Unconventional, yes.
So remember that, right? How many of you have heard that before? I know, Kelly, you've been doing this a little while, but you think about that, right? If I know that sort of guideline, couldn't I coach my client? When they call me in tears because Adrian gave them bad news, you're always the guy in the black hat, right? When they call me in tears and I go, well, what's your vehicle situation? Well, Claudia is my wife's name. Claudia has this, Ed has that. How long have you owned them? Well, Claudia's owned hers for 3.5 years. Oh, did you get a 5-year loan? Yeah. That means there's 18 months left. If they paid off 8 months worth, they would now have less than 10 months. Does that make sense to everybody? Is that something that the average agent is going to think about? No. But by doing that, their $500 car payment can now go towards housing. What does that do to the pre-approval amount? Jacks it way up, that's right. Right? Or could we go and negotiate closing costs out of the seller that are purely meant to buy down the rate? Sure. It's just numbers, right? And Adrian's a magician at working with those. But you need to be able to massage them in a way that gives your client what they're looking for so they don't go home sad, right?
Can you, one of you, explain a little bit more the paying off credit cards at closing? That's intriguing.
Yeah, we basically will take a statement for what they owe and the recent balance, then we send it to escrow. It gets added to the settlement statement, and it's just part of their closing funds. And then they mail a check off to Capital One or Chase or whatever.
Escrow
it is.
mails the check, right? So if your Capital One balance is $1,280, but it has a $110 monthly payment, the 110 is factoring into your debt to income and driving down what you qualify for. But if we just gave them $1,200, the 110 goes away.
And we don't require to close the account, they can keep it open, it just is a zero balance, so they can run it right back.
I don't know how smart that is.
That's just Fannie Mae guidelines.
I heard something about paying off student loans with your closing costs or your mortgage, or wrapping your student loans into your mortgage. Have you heard anything about that?
There's some of that, yeah, we're actually doing student loan consolidation through our, and then we're actually doing it as a separate personal loan. But there is also, you can basically have, it's similar to a revolving account, they can pay a student loan or whatever. VA allows you to use like a seller credit towards student loans like that, but VA and FHA are the only ones that do that part.
So the bottom line is, if your client's unhappy with what they are approved for, get with your lender and brainstorm ways to figure out if it can go up. I don't know if it was Molly or Kelsey, but somebody had to avoid condos because HOA dues were a deal breaker, or at least drove the price way down to offset now that you got these dues. We look at Insignia this morning, right? Their HOA dues are $700 or $800 a month. My first mortgage, when I bought my very first house, was $1,400. So you're paying half of a mortgage payment, a small mortgage payment, in just dues, right? So anyway, that's a tangent, but here's the process to them, right? They get the updated approval, they get an offer accepted, and now the lender is saying, congrats, but your pay stubs are stale, your bank statements are stale, we need this, and we need a credit card number. What do you think they're asking for a credit card number for?
Appraisal.
Appraisal. Yeah. 450?
Oh, gosh, no, instead of like 850 now.
Well, that's because you pay for the rush every time.
Well, so even a standard is 750, so I mean, King County, you'll probably get away with one, some lenders maybe it's 650, but appraisers, it'll take 3 weeks to get. So we do pay more, because we get them in 7 days, and we pay a portion as well, and it's more expensive, but otherwise you wait 3 or 4 weeks for one.
So what's the rate again?
750 to 850, FHA appraisal is 850 for FHA.
It's a chunk, right?
Crazy.
$1,000. What was it in Florida?
It was about $450, and the average turnaround time was, I would say, 7 to 10 days.
Yeah.
So California's much lower, like we just have so few appraisers out here.
Yeah.
Oregon's worse, but Washington's,
4 weeks is crazy.
yeah, I mean,
That's
we
way
get
too
them in 7
long.
days, we just
Yeah.
pay a bunch for it, right?
Yeah, you just, it's extortion, right?
Right.
They don't intend to deliver 4 weeks, they just expect you to pay the extra
Right,
$200.
to expedite the process.
Right.
Yeah. But think about that from your buyer's perspective, right? They're so elated in this market to get an offer accepted, and then all of a sudden Adrian calls and says, what's your credit card number? And it'll be $850.
We tell them ahead of time, but yeah,
Yeah.
that's one of the main things we discuss.
It's very deflating, I'm
Right.
just saying, right? All right. So now think from the get-go, the lender's perspective, right? His biggest struggle is getting buyers to start with him rather than fall in love with houses and then call him, right? Because now he's going to deliver bad news when they're emotionally invested in something they can't afford, right? So you view the buyer as a necessary evil?
No, no.
Right? So step one, they give them a 1003 or phone. They can do it over the phone. They can do it over the internet. They certainly can do it face to face. Probably 95% of them are choosing to do it over the internet, I would say.
Yeah, we do it with DocuSign to make it super easy.
Yeah.
So we just make a
I
little
mean, shoot,
questionnaire.
they can do it over their
Yeah.
smartphone, right? Then they issue a crappy lender, issues a pre-qualification letter, if I could spell pre-qualification. Then they get all the income docs, pay stubs, W-2s, bank statements, tax returns. And what is that usually cause but a bunch of questions, right?
Mhm.
What is this loss you're showing on Schedule C? What is this ownership you show on Schedule E? You have a K what, right? So he has to sift through all that and hopefully land on a full-blown approval, right? The way I usually describe it to people is lending is like a three-legged stool, right? We call it the 3 C's, right? Credit, capacity, collateral. Credit, we all know what that is, right? That's your willingness to pay. Doesn't necessarily mean your ability to pay, it's more of a willingness. I have lots of clients that have crappy credit and make tons of money. They just are irresponsible, right? So credit is willingness to pay. Capacity is ability to pay. Do you make enough money? And then collateral is the house. Well, in this step, 2 of the legs of the stool have been addressed, right? Bless you. But the third one, he doesn't have an address, so there's no way you could evaluate the house, right? I want this to stick in your brain too. If your client wants something weird, talk to your lender. Not every lender can do log homes. Not every lender can do mobile homes. Not every lender can do geodesic dome homes, right? If your client wants to live in one of those Hobbit hillside thingies, you better talk to your lender and you should tell them to move to another state because I don't think we have those, right? But this whole training is all about giving you an awareness of things that could be red flags so that you can try and jump on them with your lender and address them right away and then steer your client away from it, right? Because there will be scenarios where your lender will say, we have that product, but your client doesn't qualify for it. So they can't have a log home or whatever, right? Jay?
So with you, is there a particular category that you can't lend on? That we
Mobile
should-
homes would be one that
That's what we
we
call
can
them,
do,
okay.
yeah. So manufactured, we can definitely do, but like a mobile home is, it's like a car loan, just can't do that.
What's
So
the
let
difference
me
between-
clarify. Mobile home that's real property, double wide, 2,000 or newer.
Right, then
you-
we consider that manufactured, but, right.
So let me give you guys all a definition that we will use here in this office, all right? The MLS uses a different definition. But manufactured homes, my definition actually is manufactured home is an umbrella term for all the different types of homes that are built off-site at a facility and trailered in, right? That could be a Lindahl cedar home. You ever drive down I-5 and see those on the side of the freeway there? That could be a mobile home. That could be a modular home, right? A modular home is where they build the walls in a facility, lay them all stacked on top of a trailer and bring them out to the house and stand it up. Some of you have seen the Honomobo stuff that I've been working on, right? Those are container homes, right? They're anything that's built away from the site where it eventually sits would fall under a manufactured home. Now,
How about the boat house?
what is
Boat house.
a boathouse? Those aren't really considered manufactured, but they meet the definition I just gave, yeah.
And there's a separate product for those. I mean, like Banner Bank, for example, is like the one of the only ones that
Yeah.
really lends on those. And it's not a Fannie Mae, like a houseboat, unfortunately, is not something
Yeah.
that any conventional one would do.
I had a client that was looking at a houseboat, and I talked to Jeff at Banner Bank,
Oh,
and
you
he
did?
said, as long as it's not it's not described as it can be a floating home, but it can't be called a houseboat.
Like what you
Yeah,
have
as long as
here.
that verbiage is in, I don't know if it's the title
Deed or
or deed,
whatever.
yeah,
That's funny.
then he can lend on it, but if it's a houseboat, he cannot. It's like,
And traditional is all double wide, manufactured 1977 or newer. Anything that's single wide falls into mobile, which would be more like a car loan. So,
Yeah.
you can't,
So funny.
there's no single wide.
So be
lending.
very leery of 76 or older, single wides, and homes in parks
Hmm.
where there's no land, right? It's a lease held interest to the land. I mean, I can tell you, I got in the business in 1987, so this is my 31st year. for the first 20-plus years, I didn't do a single mobile home. Then we became a HUD listing broker, and I sold probably 60 mobiles in the next 5 years. Because FHA is the #1 lender for mobiles, and they also foreclose on mobiles, so good stuff. I have a mobile listing right now.
So before 1976, you said don't be or be
Yeah,
wary.
either single wide or 1976 and older is not something that any traditional lending can do.
It's a specific date too, it's like June 6th, 1976 or something like that.
Yeah, if you're,
'Cause
if
it's
you're
the
right
day-
at the edge of it, we'll get you the specific date, but 77 is the starting point,
Yeah.
you're good, yeah.
What happened was FHA rolled out guidelines about the quality of construction for mobiles. So lenders have all adopted, okay, well, if it met those guidelines, then we're more comfortable with it, but if it doesn't, we don't want anything to do with it. So that's why they use that cutoff.
Fun fact, mobile homes is not because they're mobile, it's because they were originally built in Mobile, Alabama.
Really? That's funny.
Really?
Random fact.
Random fact of the day. And forever memorialized in video. I like that. All right, so we get the pre-approval, right? Remember, this is from the lender's perspective, so what's Adrian gonna do at this point? Sit and wait. Track the markets, encourage the client to write because he thinks rates are moving up. I mean, his communication doesn't evaporate, but there's not a lot for him to do until we find a house, right? So we find the house, he asks for pay stubs, W-2s, or whatever's needed, depending on how long ago he issued the pre-approval, right? If you find a house right away, nothing has expired, but if anything has, he'll ask for it and order the appraisal. Then he gets the appraisal back, runs it through final underwrite, along with any conditions that were required of the buyer, and he gets a clear to close from underwriting. That then launches into the closing disclosure and doc drawing and all that, which we will cover in a minute, all right?
我咱俩的理解不一样，那个不是。
What do you think, this should say crappy agent. What do you think a crappy agent's perspective is of the process?
That's not my
That's
job.
not, yeah,
Yeah,
that's his job.
I'm not gonna pay attention to it. I'm gonna hopefully find a house and get it under contract, and then I'm gonna take my hands off the wheel until I get paid, right? That's basically how they do it. And the lender's a necessary evil. Get in the car, find a house, write an offer, get the offer rejected for lack of a pre-approval, get a pre-qual letter, get the offer rejected, lack of pre-approval, then get a pre-approval letter, get the offer accepted, get surprised when docs are at escrow, get paid. This is really an inconvenience, right? But if you're a listing broker, right, you're not going to accept that without a pre-approval. You're not going to accept a pre-qual letter. You're not going to accept just any pre-approval letter, right? You should read them.
Yep.
Determine if they're from Screaming Chicken Mortgage or Absolute Home Loans. Because if it's Screaming Chicken Mortgage, does that mean it's never going to close? No, but you better do some due diligence. If it's a mortgage company you never heard of, you need to call them, find out exactly what they did in order to do this pre-approval letter. I had a pre-approval letter from First Tech Credit Union, right? Good size, legitimate lender, specializes in helping people with IT salaries and comp plans that get vested shares of stuff, and their pre-approval letter sucks. It doesn't say what they've evaluated. So of course I have to explain to the listing broker that I've analyzed it, and I always insert that I'm a licensed lender, so you should trust my opinion is kind of the theme.
They won't put themselves on any risk at all, they
Yeah.
just say,
Yeah, I mean, we do a lot of business with East West Bank, they don't even do pre-approval letters. I go, you realize this is a distinct disadvantage for you as a lender. And I know the corporate's not comfortable with it. Okay. And I'm like, you can put all kinds of qualifiers in there, like a lot of letters. Think of how many letters you have seen that say, this is not a commitment to lend.
Right.
Why do you think that's there? Because it's not. It's a pre-approval. All right. Here's what a good broker does. It's a partnership, right? Together, Adrian and I are going to make someone's dreams come true. That's powerful, right? But if it's adversarial, or if my buyer has a negative interaction with Adrian, my job isn't to validate that, it's to make them feel better and make him look better to them. He might not even know that what he said they found upsetting, right? So you have to view your lender as a partner. Otherwise, when stuff gets off the rails, you don't have a team effort to solve it. And think about, like, those of you that have closed a lot of deals, Kelly, I know you have, there's a high percentage of transactions that have something get sideways somewhere along the way, right? That's one of the things that people compliment me on the most. If you read my testimonials and stuff, they'll say, man, this happened and Ed didn't miss a beat. That's in part because I've dealt with just about everything you could possibly come across. But also, I have absolute faith that the people I work with and my experience combined, we're going to solve whatever it is. I almost don't care, unless there's a volcano nearby. That would be something I'd have trouble with. Now 700 homes have been taken out. You're from there.
Yeah, other side, sorry,
Yeah.
still, yeah.
I've heard, just don't watch the
Crazy.
news, and Hawaii's awesome. All right, so your lender is your teammate, right? Step one is getting them pre-approved, right? And you have to do more than just, hey, talk to Adrian, talk to Nick, right? You need to make sure they connect. There will be times where I can tell while I'm sitting across from a buyer that they're going to be hard to pin down. I'll call Adrian right then and go, do you have time to take a nap right now? And I'll hand the phone to my client. Because you can take an application over the phone in less than 20 minutes and have enough to know what credit docs are needed, right? And then Adrian can email me and say, make sure you encourage them to get me the pay stubs, W-2s, 1040s, 1065s, 1120s, whatever, right? Right. Then we get the pre-approval letter. Then you guys are all going to follow the writing winning offers training so that your offer gets accepted, right? Remember, if you haven't seen that training or if you're new to us, watch the video because there's hundreds of things that you can do in our agreements besides price that will make your offer more attractive to the seller. And that goes from building rapport with the agent to you name it, right? So that allows you to go straight to step 4. I heard a stat recently that the average buyer in our MLS is writing 6 to 7 offers. We haven't updated it for a few months, but we looked at our own stats and we were writing on average 2. That's not by accident. It's because we train and we practice and we implement these techniques and we charm the crap out of listing brokers so that they want to work with us. All right? Get your offer accepted. Then you have your pre-closing orientation meeting. This is your #1 opportunity to generate referrals and testimonials. Yelp reviews, you name it. It's also your best opportunity to demonstrate even more value than what you've already demonstrated. Because think about it, at this point in the process, their offer's been accepted and they've cleared inspection. They are at their happiest at that moment. And now you're going to demonstrate even more value by showing them that you know all the steps that remain, you know which steps impact them and require a response out of them, which steps you're going to be able to work closely with your lender to make sure they happen in a timely fashion, all that stuff. And all that does is elevate in their mind your value, right? All right. Get the referrals and testimonials. Then you're going to be like a bird dog, right? What does a bird dog do? They run into the brush and they flush out birds, right? You're gonna make sure that the appraisal got ordered. You're gonna make sure when you verified it got ordered that you knew how long it's gonna take to get, so that you can call when it's supposed to arrive and make sure it arrived, right? So many agents don't do anything. The next level of activity is, yeah, I made a phone call and made sure it got ordered. And then they don't find out until 2 weeks later that it didn't get done or is late. I find out on the day it's due that it isn't coming in so that I can harass someone else. What happens between, on an appraisal, what happens between the order date and the completion date? That might involve you
Getting access to the house.
getting access. If your phone never rings, you might want to make an extra phone call, right? Now, a lot of appraisers have e-keys. The good ones all do. But if you don't get asked within a couple days to let someone in, you should call. Hey, how are they getting access? I know Adrian can tell you to the minute, we gave them your number, or we gave them the listing broker's number, or he has an e-key, that's why we use him. Great. Then I can call the listing broker. Did he access the super box? Right? I can shepherd these things along, and I end up not losing a day here and there, which then causes me to need an extension at the end. Does that make sense? There are windows of opportunity along the way where you acting with urgency can cause things to happen faster. I wish Doris was here. She had a deal where the seller made it plain as day, I am not extending and I'm keeping your client's earnest money. Because as the Chinese brokers will tell you, they have a lot of clients that write non-refundable earnest money or earnest money to be released and things like that to be more aggressive. And her earnest money was, I'm gonna guess, but it was a high 5-figure number. It was like 75 grand. So what did she do? She sat in the lobby of the East West Bank branch in downtown Bellevue until they got the docs drawn. And I told her to do that because their last comment to her earlier that same day was, hopefully tomorrow, but maybe not, if not the day after, certainly the day after that. That's the biggest bullshit answer on the planet, right? So you're telling me I might get docs on, not on day 0, which is today, maybe day 1 or 2 or 3. That's how specific you can be. You'd get fired if you answered like that, right? So I said, you get down there and you sit in their lobby and you make sure they know that you're not leaving without the docs, period. And guess what? She got the docs on day 0. All right? So anyway, there's tons of answers. We're going to talk at the end about the art of counting backwards for those reasons, but you just have to be on the lookout. You have to know when things are supposed to happen. You have to check to see that they happened. Does that make sense? And that's what this training's for. If you don't know what's supposed to happen, there's no way you could check on it, right?
And Ed, I can send out, we have a calendar that shows the milestones and then like kind of the countdown towards the close date. And I can send that out to the sales thread too.
You just reminded me that I printed it. Not yours, but ours.
Nice.
I'll share this one, and then if yours is an improvement upon it, even better. Right? Once the appraisal and the underwriting is done, there might be conditions. Right? The final underwrite might raise a question. Every time a question gets raised, the underwriter is going to ask for some documentation to solve that question. Here's where buyers get pissed off. I gave him that, and he just asked for something else. And then I gave him that, and he just asked for something else. And I gave him that. He's just going to keep asking me for stuff. Right? Has anyone heard the client say that?
Mm-hmm.
What do you think's truly happening? Is, not to pick up, let's say it's Nick, right?
Yeah.
Is Nick just trying to be a jerk and buy time? Oh yeah, give me another thing. No. Your client gave them a piece of documentation that raised a new question.
Yeah.
What could be an example? Adrian says, Janice, your client's pay stub is stale. Can you give us a new pay stub? Right? Client delivers a pay stub and they see a deduction in the deduction section of the pay stub that says OSE $515. That wasn't there before. You don't get to answer. Who knows what OSE stands for? Office of Support Enforcement. So that means between the time Adrian issued the pre-approval and the time they fell in love with the house and got an offer accepted, that his ex dragged him into court for non-payment of child support and the courts enforced a garnishment. Would that cause you to ask for more information?
Yes.
And is it conceivable that a divorce decree might raise more questions?
Yes.
I didn't realize you had 7 children under the age of 18. Now I need this. And you get a new piece of documents that raises another question. Now I need that, right?
Yeah.
It's never malice or laziness or trying to just stall. It's always because the new document raised a new question and now requires another document. And you have to be able to talk to your client in a way that takes their blood pressure down and lets them know, really at its core, that this would have happened with any other lender. Right? Because where does their brain go? God damn it, if he asks me for one more thing,
Yeah.
I'm going back to First Tech.
And they take it personally, so,
Yeah.
and especially more qualified borrowers, they have more to show, so you have to actually ask for more documentation. And we have certain programs that we can do, lighter docs on certain qualified people, but first-time homebuyers sometimes have to supply much less than a very qualified person because they have less information that's even available, so it's just a frustrating piece of it.
That's kind of his nightmare, right? And multiply that times 30 different clients or whatever, it can be not so fun. Hey, Mary. Right, so if there are prior to fund conditions, you don't have a hand in delivering them, but you sure as heck can encourage your client to hurry up and get them in. Because prior to fund means they're not going to close without them, and they have to be looked at by an underwriter, right? So there's prior to doc and prior to fund. Prior to doc has to be underwritten. Prior to fund tends to be stuff that a funder can just sign off on. But you have to have an understanding of these things so you know whether, oh man, closing might still be in jeopardy if it's prior to doc. That means they are not sure what the answer is going to mean or say or what the document is going to show. Does that make sense to everybody?
And depending on the situation, we can ask for a favor to move up prior to doc to a prior to fund to keep the timeline going. But depending on how major that item is,
Depends what it
depends on
is,
what kind of a favor we're asking
Yeah.
for. And sometimes, they'll take the chance and know that we're sending docs out on something that we're still waiting on. But we'd prefer to have it obviously beforehand.
Is it safe to say, Adrian, that if we have a track record of working together and I've always shown that I get whatever I commit to getting, that you're more able to make that exception in the future?
Yeah, and I have the same thing with my underwriting manager. I've never burned him, so he does it for me every time. But if we ever have a situation where we do not perform on that, then it makes it difficult. And we don't want to go to the well every time and be asking for it because we have only so many favors you can keep going to get. But
Right.
but we have a great relationship, and because of your agents performing and me doing the same with our underwriting ops, they've always let us do stuff.
That's good. So the real message is recognize when he's putting his neck out and do whatever you can to make sure he doesn't get his head chopped off. Because then when it needs to happen in the future to save time or save an earnest money or to get an extension or whatever, he's more likely to be willing to do it because he knows you've got his back, right? I'm backtracking a little bit, but pre-approvals is a good example. We've been working together for probably, 7 or 8 years now?
Yeah, that's
If I say these folks are solid, he'll issue a pre-approval letter with very little information because he also knows that I'm not going to let my client blame him if he can't ultimately make the loan. I'm not saying you guys should all ask him to do that, but I'm saying a track record with your lender is really helpful, right?
How easy or common is it to get fully pre-approved so that you're just waiting on that house?
We do that, any client that's willing to sign a few extra forms and let us send it into underwriting, we'll do that, yeah. So it's just called a to be determined underwrite, so we do that, yeah.
We try and do that on every.
We prefer, yeah, because obviously it strengthens the offer tremendously, and then also it increases our chances of closing very quickly and whatnot.
How long is that good for?
I mean, after, 60 days, we need updated items anyway, but having it fully underwritten, as long as nothing changes. I mean, our credit report's good for 90 days, and on an exception, some programs 120. But typically, if you're TBD and underwritten, people move pretty quick. But yeah, if they are unactive for a while, we'll just update a couple pay stubs and it'll just be re-updated, yeah.
It's great that it takes the risk out for us, like we know this person is golden. But really the most powerful pieces are that his pre-approval letter is way stronger written because it says this person has been fully underwritten. All we need is a prelim and an appraisal and a purchase and sale. And it can close faster, right? So your goal should be to have 100% of your buyers get through that far in the process because it makes your offer more attractive and makes your closings happen faster. All right? Deliver keys, get paid. All right? We have more steps than the lazy broker, and we're making a bunch more phone calls along the way. But remember, the phone calls aren't burdensome. They are a result of staying on top of things, and then if questions arise, you found out about them immediately so you could try and address them. Adrian will tell you thousands of examples where something came up, and because he had enough time to fix it, the close date still happened on time. If you don't find out about it till the day before closing, the closing is going to be delayed every time, almost every time. You pull a few rabbits out of the hat, but that's why you gotta stay on top of it, right? Any questions on this?
So, you were talking about the process. Does it expedite it by days, weeks? You were just saying how if
you
they
do the
get all the
full
job.
underwriting.
Yeah.
It depends on the borrower, so there's certain borrowers that are good at getting information, there's others that aren't. So the ones that we see that are very slow at getting information to us, we would rather push them to get it to us to do an underwrite ahead of time. I mean, we're 6 hours in underwriting, so we're turning stuff very quickly right now. But it depends on how quickly the borrower reacts to stuff. So there's borrowers that are, everything's a PDF. They could get us everything in one day and we could have the approval the next day. But it just depends on how quick they are at getting items to us.
Are there any kinds of loans that can't be fully underwritten?
Some of the jumbo products, that's a good question. So there's certain jumbo products that we can't do a full TBD underwrite. We have a second signature investor, but we can still underwrite it in our branch, which still saves a bunch of time because as opposed to our underwriter underwriting it and then we send it for second signature, right when it's under contract, we can send it off. So that still saves 4 or 5 days a lot of times.
That happened to me on my first client. She was a partner in a law firm. She actually just made partner, so her whole pay structure had changed. And because it was a jumbo loan, I was wondering, I'd heard that those can't get fully pre-approved. So.
Some of the investors don't do that, whereas others will. And then there's products that we house ourselves, and those ones we absolutely can. So it just depends on the borrower. Yeah.
So it's probably good to know what your client's income is like are they a partner in a law firm? Do they own their own business? That's going to make things
So
complicated.
here's what you all should take away from his experience. You have to understand your client's situation well enough to know if there are any red flags, right? Sometimes it's just conversational and the husband and wife are in your car and they're excited because Joe just got a new job. Red flag. Until you determine that it's the same line of work and it's in consistent growth for his salary, that's great, and he has a long-term history. But if it's, yeah, I sold copiers for someone for 20 years, and then I started my own copier sales company.
Yeah.
That's the death knell.
Right.
Because somebody who's good at selling copiers isn't necessarily good at running a business. And you can't assume they are. And underwriting won't assume they are.
And something you guys will see a lot of, and I'm going to send out a video today on it, is we've run into some issues with regard to earnest money. So when you guys are doing a purchase and sale and they say, oh, they have the money, it might be they've got $3,000 in their house, or their buddy's going to give them a couple grand or whatever it is. It's not funds that we can use towards the transaction. So when you're putting a purchase and sale together, the earnest money, there's a timeline. You guys have a specific obligation to have funds to escrow that are sourceable and usable. So I'm going to do a quick video today that just tells you the questions to ask to make sure that it's going to be funds that your lender can use, because some of your lenders may not have that discussion with the borrower, and then you put in and you find out that their earnest money's in a stock account. It takes 3 days for them to liquidate it or something like that, and then they get money from their friend, and it turns into a whole issue with the loan side of things.
Yeah.
on the
If you're following our training on buyers, we have that conversation in the first meeting. We specifically say, here's what earnest money is, here's how much it should be. In the price range you're looking at, that's about 10 grand. Is that money that you would have available? Because it would be due in 48 hours. And then that causes them to say, yeah, it's in my mattress.
It's in my safe at the house or whatever.
And
right?
then you get with him and say, all right, now I gotta have them deposit it or somehow do it in a way that will meet his guidelines. Don't just say, well, you better hurry up and go deposit that, because he might have a better technique
Right.
that bypasses putting it straight into an account. There might be better ways to do it, like a gift. Maybe you give the mattress money to mom and let mom gift it back to you, or something like.
Yeah.
We can go a lot of different ways, but just know that's a problem. Talk to your lender so that you can solve it so it's not a problem, right? One of my very first loans, this would have been back in the 80s. The guy was a vending machine, like company owner, and his earnest money was a wheelbarrow full of quarters.
He brought his escrow.
Put a Polaroid, remember Polaroid cameras? I
Yeah.
took a Polaroid and put it in his loan file, and they accepted it.
Should have taken two, one to keep.
Right.
Right,
Yeah.
right, I should frame it on the wall.
Didn't know how big of a deal it was back then.
Nowadays, that would never fly. James?
So can I ask for the gift money, so deposit in the account can become liquid
Can
right
it become
away?
liquid right away?
Or wait?
If it's going into someone else's account, he can allow, I'm the buyer, he can allow me to receive a gift to help me buy this house. And he can do that without having to source, he just needs to see a bank statement from my parents that shows they had the money.
Right.
But he doesn't need the 60-day history to show that they've always had the money.
FHA does require that though. So certain programs, you have to have the 2 months. So like on a gift from a family member, we will have to get the 2-month statement. So they can't get money from a friend and then gift it from a family member like that, because you'll see the deposit in, the
Right.
deposit out. Conventional, all we do is you wire it right to escrow, and we just show the gift letter and the wire receipt, and we don't have to source it. So certain programs you don't have, are much more flexible in being creative with where those funds are coming from.
That's why I don't want you solving it. I want you to recognize it and then
Yeah.
talk to your lender. Because your client might not be on an FHA program, which would give a different answer.
Right.
Or they are on FHA, which has a different method. Just realize that that's an issue, call your lender and say, hey, buyer, before you do anything with that wheelbarrow full of quarters, let me talk to my loan officer, right?
And
Okay.
who can give?
I was debating to ask the question, because I have a meeting tomorrow
Yeah.
regarding cryptocurrency, as how that's gonna
Whether
work.
you can
Just
do-
recently is nothing, so we can't, no programs are currently using cryptocurrency. And it was up till like 3 months ago, we treated it like a stock account, and both FHA and conventional have just said, no.
What about Potcoin? Can I use Potcoin?
Did
Did you not see Dennis Rodman?
Uh,
When the Korean summit thing happened, he was in the public eye wearing a Potcoin t-shirt because he's being paid by them.
Okay.
Because
okay.
you can't use cash to buy marijuana, so they're creating a
Oh
cryptocurrency.
boy, yeah.
That's just a lucky little side note for you watching the video.
And who is allowed to give gifts? Is it only immediate family members?
Immediate family, we can do some non-blood, like fiancés, So if it's a girlfriend, we've called it a fiance a number of times and been fine. Underwriters don't
Get
think it-
engaged.
Yeah, well, we just say just so you know, we have to put fiance on the gift letter there. And we've never had that be an issue, so like a living girlfriend has worked, but it can't, and you can get away with some like family members, and FHA allows it where you have to show a picture of knowing the guy 20 years ago, and so you can get a little
Really?
bit conventional.
I can show an old fishing photo
Right,
from 20
yeah.
years ago.
So,
FHA
Photoshop.
does, yeah.
So basically, you cannot get it from friends.
Right, it's not from a friend, unless it's like a long-standing friend, FHA does have a variance there, conventional, absolutely not, yeah.
Or conventional, absolutely not.
Conventional and jumbo, no, yep.
This loan
So you
shark
get-
that I met like 2 weeks ago.
That's
but
another
that's funny.
another good point is anything,
break your
you
leg.
can't take unsecured loans, so anything that's like, if you go to get a personal loan from, Credit One or whatever those companies are, those can't be used for down payment, or towards the loan either.
But you could take money out of your current house, like a HELOC.
Yeah, secured, so it's a secured one, or you can even take a loan against a vehicle, and we've used that before, because it's
Refi
secured.
cars, or
Yeah,
had clients.
right.
We can do a whole separate training on lending guidelines. This is more about the process of loans, so I'm gonna move on, but if you would like a class like that, email me and I'll get with Adrian and we'll put something together, all right? All right, who's seen this before?
Is it on folder?
It's in your folder, that is the correct answer. If you would take one and pass it along. Jay, you want to take one before you go? I may not be-
Actually, I'd like to share a story, and you may encounter sometime.
Yep,
I was a leasing agent. I have been
Oh, thank you.
follow up with the vendor closely to make sure everything
You
is
want one?
okay.
You want to take a look at it?
And a few days, like 3-4 days before closing, I was asking, is everything okay? Then the loan docs will be in escrow. Then I got an email saying, oh, actually, we got some conditions. The appraiser come back and say, the earthquake strip
Straps.
is not a straps is not properly installed. I said, you got appraisal report 2 weeks ago, why? you
Just
not-"
now?
Yeah,
Yeah.
just now. So I have to go back to the house and take pictures. I said, this passed the last appraisal when my seller bought it, and it should be okay. So I took the pictures, I sent it to them, and they say, no, this is not okay because we need 2, this only have 1. So my seller had to go to the Home Depot and hire the handyman to
Yeah,
come back
buy
to get that done.
earthquake
So, I mean, if I did not send that email, I don't know whether they would let us know at last minute that's a condition. So that's why
Yeah.
I
How
said,
come
you
the,
have to follow up this,
Hang on,
all
hang
the
on, hang on.
parties is not.
here's the bottom line, and we're gonna move on. Thank you for sharing that though, because that helps me make this point. When the appraisal gets ordered, you know when it's supposed to be back. You're gonna make a call to make sure it came back. You want 2 pieces of information. 3 if you consider, did you get it, right? I wanna know, did it come in at value? And I wanna know, are there any work orders? You need to always ask those 2 questions.
What is called work orders?
Work orders.
And we'll always send the email out that says, is that value, and as is, like no repairs needed.
Yeah.
So
'Cause the
then I
appraiser
got
will
the email
say.
say as is, that means no repair needed.
Correct. I mean,
Okay.
we go one step further, as is, and no repairs are needed. But as is appraisal means that there's nothing that's trailing that needs to be done to make that value.
Okay.
And you have to
Subject
ask,
to-
because you can have 10 different appraisals appraise the same house. You will get 10 different values, and you will get some that catch stuff and others that miss it. And so you want to ask, so that at least, when the appraisal first came back, if she knew about the earthquake straps at that point, she probably had 2 weeks to fix it. But instead, she found out 3 days before closing, right? Thankfully, your seller was very accommodating. So this sheet, we're going to run through it. This is a page out of the pre-closing orientation folders that are up front. We have a separate training on that process, but this is straight out of that folder. It's used to communicate to the buyer what to expect. We're going to cover it right now so you too know what to expect, right? So here's how it lays out. Column number 2 are the things that Adrian is going to do. right? And how long it takes in column number 3. Column number 4 is what escrow is going to do. Column number 5 is what you're going to do. And column number 6 is what your buyer is going to be expected to do. So I'm going to go through this as if you guys are all my buyer. But I want them to be familiar with the process, because from their perspective, remember on that earlier slide, once they clear inspection and they give their credit card to the lender, it's kind of crickets for a while Adrian's working his ass off and escrow's working their tails off, right? You want your client to realize that just because you're not doing a whole lot, these folks all are. And it's all in your favor that they're doing it, right? All right, so remember, the assumption is across the top, your inspection's done, now what? Well, step 1 is order the appraisal. 1 to 2 weeks to get it, as long as you pay the extra $200, right? Can be longer with VA and FHA, and that changes from 1 month to the next. So just off the top of your head, how long are Govy appraisals taking right now?
And the problem is, it's literally down to the appraiser. Some will take, VA allows you to have 21 days, FHA gives you some variance. Appraisers are human, and some of them will get a VA appraisal to us in 7 days, just like any other one, and others will take their full 21 days. But it's
Yeah.
pretty rare. I mean, the average is 10 days on the VA appraisal right now on the FHA.
So your takeaway from that remark is you just got to bird dog it, right? When it gets assigned, he doesn't know who the appraiser is until it gets assigned. He's making a phone call to ask that guy, what's your turn times right now? You want to know that too, right? And you want to do everything you can to facilitate the appraiser getting access. I've had appraisers leave me voicemails like, well, I guess this deal's not going to close on time because you won't give me access to this house. And I'm like, going to climb through the phone and choke the guy, right? Because whenever that's happened, it's a vacant house that has a super box and a contractor box. I don't have to meet you. You just have to know how to count to 9 and go open the contractor box. Anyway, all right, so appraisal gets ordered. We know it's going to take a week or 2 longer if it's government, right? Then look at the time in the next box. Closing minus a week, right? Whatever the time frame is to get the appraisal, once it's back, that's when we can go into final underwriting. Most lenders are going to tell you final underwrite is going to take 48 to 72 hours. Dozens of times where we didn't have enough time, Adrian was able to do it a lot faster. He just told you earlier, it's 6 hours right now, right? So it depends on how busy they are, what rates are doing, right? If rates are low, guess what? Underwriting's jammed with refis. That sucks for us doing purchases, right? But most lenders prioritize purchases. So anyway, they're going to quote you that. Just know that if need be, it could be compressed if you're working with a familiar lender. If you're working with First Tech Credit Union, don't plan on anything getting compressed, right? The buyer's tasks at that point are to update anything that's missing or stale, right? Then we get through underwriting and we get our final conditions. Depending on what they are, that might involve the buyer. It could involve the appraiser. It could involve you and the listing broker doing an addendum. We don't know what they are until they ask for them, right? You want to jump on it so that they can review whatever those final conditions are, right? They are going to send the closing disclosure once they've signed off on everything. Now, you heard Adrian say earlier that sometimes they can get conditions that are prior to fund. That means they're not holding up the closing disclosure.
We'll send it at approval. So that's a good question to ask if you're a listing agent, is ask the lender that the buyer has, is do they send the closing disclosure at approval or at clear to close? So a lot of lenders won't do the CD until all prior to doc conditions are signed off.
Yeah.
Others, right at approval like us, will send out the CD, so that saves 3 or 4 days.
That's huge. Because what you probably don't realize, because we haven't said it, is the buyer has to have the closing disclosure for 3 days before they can then sign the docs. So they have to send that thing out and wait. So to send it out at approval gets all the waiting out of the way while we're gathering conditions or doing whatever. And if you think about it, it's kind of lame for someone to do it later, because what they're saying is we weren't confident in the numbers yet. Well, usually that's because they're going to screw the buyer and charge them more, right? But by that point, you have the loan product selected, you probably have locked in the interest rate, and everything should be known, right? So loan documents get sent to escrow. Escrow has to work them up, they say, right? They have to prepare escrow instructions, they have to get everything organized, and then they have to schedule an appointment. So the advice you should give your client is, now when we get to this part of the process, because remember, I'm having this conversation up here at the beginning. I'm just going through it with them. So I say, when we get to the part where they're getting ready to sign you, all I can advise you is just be flexible. Because what we won't know until the day arrives is how many other appointments do they have, how many openings do they have for you to sign. And then I look at both of them, if there's two, and I say, do you work for a company or a job where you can take your lunch really at any time during the day? And they'll go, yeah, okay, so, and I do it to make a joke. You might have to eat lunch at 8 a.m. because that might be the only opening they have. So just be flexible. And they go, okay, right? All I'm doing is trying to forewarn them of what the steps are so that they don't get surprised, right? Think of the stress that would be involved for a buyer who gets a phone call at 4:30 on a Tuesday from an escrow officer who says, my only appointment is tomorrow morning at 7:30 in the morning. Their initial reaction isn't going to be, I'll take it. It's going to be, screw you, give me a better time. I'm not coming there at 7:30 in the morning, right? But escrow is not trying to be mean or rude. They know because of the pressure I put on that it has to sign tomorrow. And they only had one opening, right? But because I inoculated my client to being flexible, if they were to get that phone call, they'd be like, yep, we'll take that. Looks like we're having breakfast for lunch, right? Then closing minus 2 days, they sign. You should be calling the listing broker to find out how you're going to get keys. You also should be coaching him into letting you have them once you get recording numbers. What does the contract say? When are you entitled to keys? 9 p.m. So really you're asking for a favor. So be charming and persuasive. But I get keys upon recording numbers almost 100% of the time. The only time I don't is not because I didn't charm or persuade, it's because the seller needed all the way till 9 to finish packing. But I'd rather find out about that a couple days before closing, because who else is packing? Your buyer, right? You want to inoculate them to, okay, we may not get possession till literally 9 p.m. So if you want to do the pizza and beer with your friends type of move, you might want to start Wednesday morning, right? The earlier I find out about those sorts of things, the easier it is for my client to adjust and not overreact and be stressed out, right? That's the number one thing we're trying to avoid. All right. So they signed. We found out we can get keys when we want them. The lender gets the signed docs back, and escrow gets everything ready to take down to record. All right? They literally have to drive, well now they can do electronic, but they used to have to drive to the courthouse. I had one closing delayed because the courier got in a car accident. How screwed up is that, right? The buyer and the seller both got screwed because this guy couldn't avoid a collision, right? Your job, stay in touch with your lender. Make sure they're on track, right? Closing day. The lender will notify escrow when you're released to record. That means the lender has done everything they need to do, including wiring the money to escrow, And escrow is authorized to record once everything balances. The wire shows up, the earnest money was already there, right? They drive it down to the courthouse and record, get funds, they release funds to the appropriate parties, and you get to deliver the keys to the buyer. How much total time is in this column? 1, 2, 2 to 3 days, so that's 4 to 5, 5 to 6, 7 to 9, right? It's like 10 plus days. I've done deals with Adrian where from final underwrite to funded took 24 hours. One time even less than 24 hours. So we want to coach everyone along the way to expect this, so that when we need a favor, it's not on every deal, it's on the isolated deal, right? Just like when he needs a favor from underwriting, they know he's going to deliver it. Well, if he asked for a favor on every deal, they'd stop saying yes, right? So let's talk about the art of counting backward, right? What are we counting backward from?
Losing. Getting keys.
This last box has a deadline, right? This last row. It's whatever your close date is, right? So if Doris has to sit in the lobby to make sure the docs get drawn, it's because she's worked backwards. So we're going to work backwards through a scenario with Adrian, just so you can hear how the conversation goes. You don't all work with Adrian though, so you need to have these conversations with whomever your lender is, right? So usually it goes like this. It's, hey Adrian, it's Ed. I know your CD went out, and we assume we had a previous conversation about trying to get an extension. And I'm now calling him and telling the seller said, go pound sand, which is no, right? So I'm like, dude, he refuses. Today's Wednesday, our close date is Friday. I couldn't even get you Monday, right? Because any 24 hours would help him, right? So the CD's already gone out, that's the good news, because he did it on the day of approval. And let's say we just sent in the last pay stub, so they hadn't proceeded with docs because they were waiting on one pay stub. But now he has it. He just got it, but now he has it. And I say, we have 48 hours, dude. I know you have to still underwrite that pay stub, right? Which shouldn't take very long, but it still takes a third party, and it's still an employee of his company, but it's a different person. You don't know what their schedule is. You don't even know if they're sitting there at their desk or out to lunch or whatever. How are we gonna cram clear final conditions all the way through to fund in 48 hours? And you're gonna say, well, I can have the pay stub signed off by noon. We can get docs out today. They could sign tomorrow, close on Friday. That was a pretty easy example, right? But what if today was Thursday? I could get the pay stub signed off by noon, docs out today, meaning Thursday. They would have to sign early enough in the day on Friday to fund and record in the same day. Is that possible? What's
It's
necessary
not,
for that to happen?
Not our favorite, but we definitely can, as long as we don't have some outside second mortgage or something like that, we can sign and fund on the same day. Typically, we would prefer to sign, of course, the night before and have escrow get scan docs over. For us, if we sign before and get docs back before 3 o'clock the day before, it's not even considered a rush, it's just, that's what we always will do. If they get docs back after 3 o'clock, it's considered a same-day funding, which is a favor. But we've done that a number of times.
A number of times.
Do you need the original copy of the?
No,
certificate?
we never need originals for any of our stuff.
So could you sign at 7:30 in the morning and still close?
The same
Like
day?
what's the latest you could sign on the same day?
Depends on how quick escrow is at getting stuff back. So the hardest part about kind of making any assumptions is we have to deal with escrow and other parties that are outside of our control. But if they get us the stuff and they're working very closely with our funder to reconcile and balance and everything and get the final escrow conditions signed off, we've gotten docs back as late as 10:30 and still gotten a wire out in time, 11 o'clock. But if they're signing like at 11, there's no way.
Your
it's
wire
just-
cut off is 11?
No, our wire cutoff on most products is noon, and we can push it to like 1 or 1:30 at the very, very latest.
So conceivably, not that we're all gonna put
Mhm.
this to the test, but conceivably a wire can be ordered and sent at 1:30 and still arrive the same day.
Mhm. Yeah.
So that's why the rapport and the strength of the relationship with your lender is so powerful, because if I'm doing a deal with XYZ lender and it's the first time they've ever worked with me, they aren't gonna do me favors like that, right? Now, they might try because they know I sell a lot of houses and want to win my business or whatever, but you can't count on that, right? So that's why you want to use your home team lender, and you want to encourage at all opportunities your client to abandon whoever they're working with. That's in another training video where there's 3 occasions in the first meeting for us to elbow out a lender and insert ours. We train on that, we practice that, and this is why. Because you never know which deal is going to be that requires you calling in everybody and saying, all right, for this to happen, everybody has to be operating in concert, right?
And we always call the listing agent early on too and send them like a Starbucks card, and we want to have if we ever have to go for a favor to the listing agent, we want to have that rapport already built.
Yeah.
Because it's a lot easier to say, hey, as opposed to I haven't heard from you